Based on the provided data, the trend for Bitcoin appears to be slightly bullish. The price has been fluctuating within a range, but there is a noticeable upward movement in the historical data, supported by the forecast price increasing each day. The RSI indicator fluctuates around the neutral level, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show a narrowing range, indicating potential for a breakout in either direction. A possible strategy could involve a long position entry around $97,000, with a stop-loss order placed at $95,600, the identified support level. The target price could be set at $99,400, based on the forecast data and the potential for a breakout above the upper Bollinger Band. This strategy leverages the potential upward momentum while mitigating risk with a defined stop-loss. Based on the provided data, Bitcoin Cash appears to be in a sideways trend with a slight upward bias. The historical price data shows consolidation around the support level of $325, with resistance at $343. The forecast data suggests a continuation of this sideways movement with potential for slight dips. Considering these factors, a strategy based on the RSI indicator with an oversold level of $20 and an overbought level of $80 seems most suitable. We should look for entry opportunities when the RSI falls below $20, indicating an oversold condition. A stop-loss order should be placed below the recent swing low to limit potential losses. The target price could be set at the resistance level of $343, aiming for a potential upside move. Alternatively, we could wait for the price to pull back to the support level of $325 and enter a long position with a stop-loss below the support and a target price at the resistance level. Remember to adjust these parameters based on market volatility and risk tolerance. Based on the provided data, the stacks appears to be in a sideways trend with a slight bearish bias. The historical price data shows a range-bound movement with support around $0.904 and resistance at $0.987. The forecast data suggests a further decline in the coming week, supporting the bearish bias. The RSI indicates that the asset is not currently oversold or overbought, suggesting a potential for further consolidation. Given these observations, a conservative strategy could involve waiting for a pullback towards the support level of $0.904 before entering a short position. The stop-loss order should be placed slightly above the recent high, around 93 cents, to minimize potential losses. The target price could be set at the lower end of the forecast range, around 82 cents, aiming for a potential profit of approximately $10%. This strategy utilizes the support level as a potential entry point and sets realistic profit and loss targets based on the forecast and historical price action. Based on the provided data, Ethereum appears to be in an upward trend. The price consistently broke above the support level of $2,590 and approached the resistance level of $2,740. The forecast prices also suggest a continuation of this upward trend. RSI indicates the asset is not overbought, with values staying below $80. The Bollinger Bands show price action consolidating within the bands, suggesting a potential breakout to the upside. Therefore, a long position is recommended. Enter a long position at $2,670. The closing price on February 24th, set a stop-loss order at $2,590, just below the recent support level. The target price is set at $2,800, representing a potential 8% gain based on the recent resistance level and the upward trend. This strategy utilizes the combination of trend analysis, RSI, and Bollinger Bands to identify a favorable entry point with a defined risk and reward profile. Based on the provided data, XRP appears to be in an uptrend. The historical price data shows a consistent upward movement, with the price closing higher on most days. The forecast data also suggests continued upward momentum. The RSI indicates the asset is not overbought, and the Bollinger Bands suggest potential for further price increase as the price is currently trading near the lower band. Therefore, a long position could be considered. A suitable entry price would be around $2.65, the closing price of February 20th. A stop-loss order could be placed at $2.56, the low of February 14, to limit potential losses. The target price could be set at $2.78, the high of February 13, aiming for a 5% gain. This strategy leverages the potential for continued upward price movement while managing risk with a defined stop-loss. Analyzing the provided historical and forecast data for Binance Coin, a potential upward trend emerges. The price has shown consistent growth over the past 2 weeks, with support holding firmly around $616. The forecast data suggests continued upward movement, with prices projected to remain above the recent highs. Based on this, a long position in Binance Coin is recommended. A suitable entry point could be around $655, aligning with the forecast and offering a potential risk-reward ratio. A stop-loss order should be placed at $616, protecting against a sudden reversal. The target price could be set at $674, representing the recent resistance level and offering a potential profit of approximately 3%. This strategy leverages the identified trend and utilizes technical indicators to manage risk and maximize potential returns. Based on the provided data, Stellar appears to be in a consolidation phase with a slight upward bias. The historical price action shows a range between the support level of $0.323 and the resistance level of $0.349. The forecast prices suggest a continuation of this trend with prices hovering around the 33 cents range. A potential long position can be considered when the price breaks above the resistance level of $0.349. The entry price should be set at the breakout point, with a stop-loss order placed below the recent swing low around $0.323. The target price can be set at the next resistance level, which could be around $0.365 based on the historical price action. This strategy incorporates both the trend identification and the breakout confirmation, aiming to capitalize on the potential upward momentum. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The support level of $3.54 provides a potential buying opportunity, but caution is advised due to the bearish outlook. A strategy could involve entering a long position at the support level of $3.54 with a stop-loss order placed below the recent low at $3.37. The initial target price could be set at the resistance level of $3.71, with a potential for further upside if the trend reverses. However, it's important to consider the RSI and Bollinger Bands. The RSI is currently hovering around $30, indicating oversold conditions, which could signal a potential short-term bounce. The price is also approaching the lower Bollinger Band, suggesting a possible oversold bounce. Therefore, a more conservative approach might involve waiting for a confirmation signal, such as a bullish crossover of the RSI or a bounce off the lower Bollinger Band before entering a long position. Based on the provided historical and forecast data, Cardano appears to be in a sideways trend with potential for upward movement. The support price at $0.753 acts as a strong foundation, while the resistance at $0.809 presents a potential ceiling. The RSI indicator, currently hovering around $48, suggests that the asset is neither overbought nor oversold, indicating a neutral sentiment. A bullish strategy could involve entering a long position when the price breaks above the resistance level of $0.809. The stop-loss order should be placed below the recent support level at $0.753 to limit potential losses. The initial target price could be set at 85 cents, representing a 5% gain. This strategy capitalizes on the potential upward momentum while managing risk effectively. Based on the provided data, Litecoin appears to be in an upward trend. The price has consistently increased over the past 2 weeks, and the forecast suggests continued growth in the coming week. The support price of $127 provides a strong base for this upward movement, while the resistance price of $135 presents a potential hurdle. A buy position could be initiated when the price breaks above the resistance level of $135. The stop-loss order should be placed below the support price of $127 to limit potential losses. The target price could be set at $140, which aligns with the forecast high for the coming week. Additionally, we can leverage the RSI and Bollinger Bands indicators to refine our entry and exit points. An RSI reading below $20 suggests an oversold condition, while a reading above $80 indicates an overbought condition. We can look for buy opportunities when the RSI dips below $20 and bounces back, signaling potential upward momentum. Conversely, we can consider selling when the RSI reaches $80 or higher, indicating a potential overbought situation. The Bollinger Bands can also provide insights into price volatility. Price movements outside the bands often signal a potential trend reversal or significant price fluctuations. We can use these signals to adjust our stop-loss and target prices accordingly. Based on the provided historical and forecast data, STRK appears to be in a sideways trend with a slight upward bias. The support price of $3.06 has held strong, indicating potential buying interest. The forecast prices suggest a continuation of this sideways movement with potential for upside. A strategy could involve a long entry at $3.10, with a stop-loss at $3.04 and a target price of $3.30. This strategy utilizes the support level as a risk management tool and aims to capitalize on the potential upward movement predicted in the forecast. The RSI indicator, currently around $40, is not in overbought or oversold territory, suggesting the market is not excessively bullish or bearish. The Bollinger Bands show a narrowing range, indicating a potential breakout in either direction. Based on the provided data, Aptos appears to be in a slight upward trend. The historical price data shows a gradual increase over the past 2 weeks, with the forecast data suggesting continued growth. The support price at $5.87 provides a strong foundation for potential buy opportunities. A strategy utilizing the RSI indicator suggests buying when the RSI falls below $30, indicating an oversold condition. A stop-loss order should be placed at $5.87, just below the support level, to limit potential losses. The target price could be set at $6.30, based on the recent price action and the forecast data. Additionally, watching for price bounces off the lower Bollinger Band could present further entry points. Remember that this is a general strategy and should be adapted based on individual risk tolerance and market conditions. Based on the provided data, SE appears to be in an upward trend. The historical price data shows a consistent increase, with the forecast data suggesting continued growth. The support price of $0.221 provides a solid foundation, while the resistance price of $0.471 indicates a potential ceiling. A long position could be initiated when the price breaks above the recent resistance level. A stop-loss order should be placed below the recent support level at $0.221 to limit potential losses. The initial target price could be set at $0.267, which represents the recent high. In addition to the trend analysis, the RSI indicator suggests an opportunity. The RSI has been hovering around the $30 level, indicating potential oversold conditions. A long entry could be triggered when the RSI crosses above $30, confirming the bullish momentum. The Bollinger Bands further support this strategy. The price has been consolidating within the bands, suggesting a potential breakout. A long position could be entered when the price breaks above the upper Bollinger Band, signaling a strong upward move. Combining these three strategies, a robust and well-defined position strategy can be developed for SE. Based on the provided data, Ethereum Classic appears to be in a sideways trend with a slight upward bias. The historical price data shows fluctuations within a range, with support around $20.20 and resistance at $26.10. The forecast prices suggest continued consolidation within this range. A strategy based on RSI could involve buying when the RSI dips below $30, indicating oversold conditions, with a stop-loss placed at $20.20 to protect against a break below support. The target price could be set at $26.1, representing the resistance level. An alternative strategy based on Bollinger Bands could involve buying when the price touches the lower Bollinger Band, signaling a potential bounce. A stop loss could be placed below the recent low, and the target price could be set at the upper Bollinger Band. However, the current Bollinger Bands are relatively tight, suggesting limited volatility. Therefore, a combined strategy that considers both RSI and Bollinger Bands, with a focus on buying near oversold RSI levels and the lower Bollinger Band, might be the most efficient approach. This strategy would offer a balance between risk and reward, capitalizing on potential price movements within the established range. Based on the provided data, Polygon appears to be in a sideways trend with a slight downward bias. The historical data shows price fluctuations within a relatively narrow range, with support around $0.302 and resistance at 44 cents. The forecast data suggests a continued downward movement in the coming week. Considering these factors, a short position strategy could be implemented. Enter a short position at $0.307, the closing price on February 20th, with a stop-loss order at $0.314, the previous week's high. The target price could be set at $0.288, the forecasted low for February 25th. This strategy leverages the potential for a price decline and utilizes technical indicators to manage risk. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further drops. The RSI is generally below $50, indicating bearish sentiment. The Bollinger Bands are constricting, suggesting a potential for a break in either direction. A long position would be risky, given the prevailing trend. Therefore, a short position strategy is recommended. Enter a short position at $0.159, the highest price point in the last 2 weeks. Set a stop-loss order at $0.165, slightly above the recent support level. Aim for a target price of 12 cents, based on the forecast data and the potential for further downward movement. This strategy capitalizes on the bearish trend and aims to profit from the predicted price decline. Based on the provided data, optimism appears to be in an upward trend. The historical price data shows a consistent increase, and the forecast data suggests this trend will continue. The RSI indicates that the asset is not currently overbought, and the Bollinger Bands show that the price is trading within the upper band, suggesting potential for further upside. Therefore, a buy position is recommended with an entry price around $1.12. A stop-loss order should be placed at $1.09 to limit potential losses. The target price for this position is set at $1.18, aiming to capitalize on the upward trend. This strategy combines the upward trend, RSI momentum, and potential breakout from the Bollinger Bands to generate a profitable trade. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI, while showing some minor fluctuations, remains below $30, indicating oversold conditions. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction, but the overall trend favors a downward movement. Therefore, a bearish position is recommended. Enter a short position at the current market price of around $0.235. Set a stop-loss order at $0.246, slightly above the recent resistance level, to limit potential losses. The initial target price is $0.211, aligned with the first forecast price in the downward trend. This strategy capitalizes on the identified downtrend and utilizes technical indicators to manage risk and potential profit. The analysis of historical and forecast data suggests a potential downtrend for Solana in the coming week. The price has been steadily declining over the past 2 weeks, and the forecast predicts further decreases. The support price of $168 might act as a temporary floor, but breaking below it could accelerate the decline. Based on this, a short position is recommended. Enter a short position at the market price when Solana breaks below the support level of $168. Set a stop-loss order at $172 to limit potential losses. The initial target price is $155, which represents a 7% decline from the entry price. As the downtrend unfolds, adjust the stop-loss order to the cost basis and consider trailing stop-loss orders to lock in profits. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $0.772. The forecast data also suggests a continued downward movement in the coming week. Considering this trend, a short position could be considered. A potential entry price for a short position could be around 80 cents, with a stop-loss order placed at $0.824, the recent resistance level. The target price for this trade could be set at 71 cents, based on the recent lows and the projected downward trend. This strategy utilizes both the trend analysis and the support/resistance levels to determine entry and exit points. Based on the historical data and forecast, Render shows a potential downtrend. The price has been generally declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support price at $4.18 might act as a temporary floor, but the overall trend points to a bearish outlook. Considering these factors, a suitable strategy could be to enter a short position when the price touches the $4.18 support level. The stop-loss order should be placed at $4.25 to limit potential losses. The target price could be set at $3.80, which aligns with the forecast low for the coming week. This strategy leverages the potential downtrend while managing risk through a defined stop-loss. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a general decline, and the forecast data predicts further price decreases. The support price of $0.136 suggests a potential floor for the price, while the resistance price of $0.153 indicates a level of resistance that the price may struggle to overcome. Considering these factors, a bearish strategy could be implemented. A short position could be entered at the market price when the price approaches the resistance level of $0.153. The stop-loss order should be placed above the recent high, around $0.155, to limit potential losses. The target price could be set at the support level of $0.136, aiming for a profit of approximately $0.017. This strategy takes advantage of the downtrend and utilizes support and resistance levels to define entry and exit points. Based on the provided data, Doge-Coin appears to be in a sideways trend with a slight upward bias. The historical data shows a price range between $0.246 and $0.272, with the recent forecast indicating a potential dip below 25 cents. Considering these factors, a long position could be initiated if Doge-Coin breaks above the recent resistance level of $0.272. The entry price for this trade would be $0.273, with a stop-loss order placed at $0.262, below the support level and recent lows. The initial target price would be set at $0.291, representing a potential 6.6% gain. This strategy leverages the upward bias observed in the historical data and the potential breakout above the resistance level. It also incorporates risk management by placing a stop-loss order to limit potential losses. Based on the provided historical and forecast data, PEPE appears to be in a sideways trend with a slight downward bias. The support level at $0.000000930 provides a good entry point for a potential long position. The RSI suggests the asset is not oversold, but it is hovering near oversold territory. A buy order could be placed at $0.000000930 with a stop-loss order at $0.000000840, the lowest point of the Bollinger Bands during the past 2 weeks. The target price could be set at $0.00001010, which represents a significant resistance level that has been tested recently. This strategy aims to capitalize on a potential upward move in PEPE while mitigating risk by setting a tight stop loss. Based on the provided historical and forecast data, SHIB appears to be in a sideways trend with a slight downward bias. The support and resistance levels are relatively close, indicating a potential for volatile price movements. Considering this trend, a strategy based on RSI with oversold and overbought levels of $20 and $80 respectively could be effective. A long position could be initiated when the RSI dips below $20, indicating an oversold condition. The entry price would be set at the current market price. A stop-loss order should be placed below the recent swing low, around $0.0000145, to limit potential losses. The target price could be set at the resistance level of $0.0000212, aiming for a potential profit of approximately $45%. Alternatively, a short position could be considered when the RSI rises above $80, signaling an overbought condition. The entry price would be the current market price, with a stop-loss order placed above the recent swing high, around $0.0000193. The target price could be set at the support level of $0.0000152, aiming for a potential profit of approximately $20%. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, with support at $0.607 and resistance at 69 cents. The forecast data further reinforces this downward trajectory. The RSI indicates oversold conditions, suggesting a potential for a short-term rebound. However, the overall trend and the forecast prices suggest a continued decline. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price reaches the resistance level of 69 cents. Set a stop-loss order at 71 cents to limit potential losses. Target the price of 55 cents, which aligns with the forecast data and the support level of $0.607. This strategy utilizes the bearish trend, the RSI oversold signal, and the forecast price target to maximize potential profits while managing risk. Based on the provided historical and forecast data, Doge-Coin appears to be in a slight downtrend. The price has been hovering around the support level of $0.00286, with occasional dips below this level. The forecast data suggests a continuation of this downtrend in the coming week. Considering this, a bearish strategy could be employed. A suitable entry point would be around $0.00296, just above the recent support level. The stop-loss order should be placed at $0.00303, the resistance level, to limit potential losses. The target price could be set at $0.0027, aligning with the forecast low for next week. This strategy leverages the potential for a further decline in price while mitigating risk through a well-defined stop-loss. Based on the provided historical and forecast data, Near Protocol appears to be in a sideways trend with a slight downward bias. The price has been fluctuating between the support level of $3.14 and the resistance level of $4.66. The forecast data suggests a potential dip in price towards the end of the week. Therefore, a conservative strategy could be to wait for a pullback towards the support level of $3.14 and enter a long position with a stop-loss order placed below the recent low of $3.14. The target price could be set at the resistance level of $4.66. Alternatively, a more aggressive strategy could be to enter a long position at the current market price with a tighter stop-loss order and a higher target price. This strategy would capitalize on any potential upward momentum, but it also carries a higher risk. Based on the provided data, Internet Computer appears to be in a short-term downtrend. The historical price data shows a consistent decline from February 7th to February 20th, with the price falling below the support level of $6.96. The forecast data also suggests a continued decline in the coming week. Therefore, a bearish strategy is recommended. Enter a short position at the market price on February 21st, with a stop-loss order placed at $6.96 to limit potential losses. The target price for this trade is $6.48, based on the forecast data for February 27th. This strategy utilizes the support level as a stop-loss and the predicted price low as the target. Based on the provided data, Injective appears to be in an upward trend. The historical price data shows a consistent increase over the past 2 weeks, and the forecast data suggests this trend will continue in the coming week. The RSI indicator also supports this view, with values consistently above the oversold level of $20 and trending upwards. The Bollinger Bands indicate that the price is currently trading within the upper band, suggesting potential for further upside. Therefore, a long position is recommended. The entry price should be around $14.30, the predicted opening price for February 21st. The stop-loss price should be set at $13.90, the identified support level. The target price can be set at $15.60, based on the historical high and the projected upward trend. This strategy capitalizes on the positive momentum of Injective while managing risk with a defined stop-loss. Based on the provided data, BTC appears to be in an upward trend. Historical prices show a consistent rise, with the forecast data projecting continued growth. Support at $412 provides a strong foundation, while the resistance at $563 suggests potential for further upward movement. The RSI, currently hovering around $60, indicates the asset is not overbought, suggesting further potential for price increases. A buy position can be initiated when the price breaks above the recent resistance level, targeting a price of $462, based on the forecast data. A stop-loss order should be placed at $412, the support level, to mitigate potential losses. The RSI strategy could be used as a secondary confirmation, waiting for a pullback to the $40 to $50 range before entering the position. The Bollinger Bands indicate potential volatility, so managing risk through a stop-loss order is crucial. Based on the provided data, THETA network appears to be in a downtrend. The historical price data shows a general downward movement, with the price falling below the support level of $1.26 several times. The forecast data also suggests a continuation of this downtrend, with prices predicted to fall below the current support level. Given these observations, a short position is recommended. The entry price for the short position should be around $1.33, which is slightly above the recent low, but still within the downtrend. The stop-loss price should be set at $1.38, which is the recent swing high and would limit potential losses. The target price for the short position could be $1.18, which is the predicted low for next week based on the forecast data. This target price represents a potential profit of approximately $12%. The RSI and Bollinger Bands also support this bearish outlook. The RSI is currently below $30, indicating oversold conditions, but the price has not yet bounced back. The price is also trading below the $20 day moving average, and the Bollinger Bands are contracting, suggesting a potential breakout to the downside. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator is hovering around oversold levels, suggesting potential for a short-term bounce, but the overall trend remains bearish. Therefore, a short position could be considered. A potential entry price would be around $1.15, with a stop-loss placed at $1.18 to limit potential losses. The target price could be set at $1.02, aligning with the forecast data and the support level at $1.06. This strategy leverages the downtrend and the oversold RSI, aiming to profit from a further decline in price. Hooked Protocol shows a fluctuating trend with a slight upward bias over the past 2 weeks. The forecast data suggests a continuation of this upward trend, with prices predicted to hover around the 19 cents range. The support and resistance levels further reinforce this view, with strong support at $0.198 and resistance at $0.212. Based on this analysis, a long position can be considered. The entry price should be around $0.198, the support level. The stop-loss order should be placed at $0.195 to limit potential losses. The target price can be set at $0.212, the resistance level, aiming for a potential profit of around $7%. The RSI indicator suggests that the asset is not currently overbought or oversold, further supporting this strategy. Based on the provided data, Artificial Superintelligence Alliance appears to be in a sideways trend with a slight bearish bias. The historical price data shows consolidation around the support level of $0.757, with recent price action dipping below this level. The forecast data suggests a further decline in price over the next week. The RSI indicates that the asset is currently in a neutral position, neither oversold nor overbought. Given this analysis, a conservative strategy would be to wait for a clear break below the support level of $0.757 before entering a short position. A potential entry price could be around 74 cents. The stop-loss order should be placed above the recent high at $0.773 to limit potential losses. The target price could be set at 68 cents based on the forecast data. This strategy utilizes the combination of price action and technical analysis to identify a potential short opportunity. Based on the provided data, Polkadot appears to be in a slight upward trend. The historical price data shows a gradual increase over the 2 weeks, with the forecast data suggesting continued growth. The support and resistance levels also indicate potential for further upside, with the support at $4.77 acting as a strong base. Therefore, a long position is recommended. The entry price should be around $4.85, the stop-loss price should be set at $4.77 to protect against a potential reversal, and the target price could be around $4.95 based on the forecast data. This strategy leverages the potential upward momentum while managing risk effectively. Based on the provided historical and forecast data, Filecoin appears to be in a sideways trend with a slight upward bias. The support price of $3.33 provides a solid base, while the resistance price of $4.93 caps potential upside. We will initiate a long position when the price breaks above the resistance level of $4.93 with a stop-loss order placed at the previous day's low. The target price will be set at $5.50, representing a $10% profit margin. Additionally, we will utilize the RSI indicator to confirm our entry signal. We will wait for the RSI to move above $70, indicating overbought conditions, before entering a long position. This will help to mitigate the risk of entering a trade too early and potentially getting stopped out. The Bollinger Bands can be used to further refine our entry and exit points. We will look to enter a long position when the price breaks above the upper Bollinger Band and exit the position when the price falls below the lower Bollinger Band. This strategy aims to capitalize on the potential upside of Filecoin while managing risk through appropriate stop-loss and target price levels. Based on the provided data, Conflux appears to be in a bullish trend. The historical price data shows a consistent upward movement, supported by the increasing RSI values. The forecast data also suggests continued upward momentum. The support level at $0.113 provides a strong foundation for potential buying opportunities. Therefore, a long position strategy can be implemented with an entry price at $0.113, support level, a stop-loss price at $0.110, below the recent support level, and a target price at $0.120, resistance level. This strategy capitalizes on the bullish trend while mitigating potential losses. The RSI indicator can be used as an additional confirmation signal. Buying opportunities can be identified when the RSI dips below $30, indicating oversold conditions, and selling opportunities can be triggered when the RSI surpasses $70, signaling overbought conditions. Based on the provided historical and forecast data, Ethereum name service appears to be in an uptrend. The price has consistently risen over the past 2 weeks, with support holding firmly around $25.1. Forecast data suggests this upward momentum is likely to continue. A potential strategy is to enter a long position at the next pullback towards the support level of $25.1. The stop-loss order should be placed below the recent swing low, around $24.80, to manage risk. The initial target price could be set at the resistance level of $30.90, with a potential for further upside if the uptrend persists. Based on the provided historical and forecast data, Avalanche appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $23.50 is crucial, and a break below this level could signal a more significant decline. Therefore, a bearish strategy is recommended. Enter a short position at $24 with a stop-loss order at $24.50. This stop-loss protects against a potential reversal in the trend. The target price is set at $22.50, based on the forecast data and the downtrend. This strategy utilizes the support level, historical price action, and future price predictions to maximize potential returns while managing risk. Based on the provided data, Doge-Coin appears to be in a consolidation phase. The price has been fluctuating within a range, with support around $0.0316 and resistance around $0.043. The RSI indicator is currently hovering around $39, suggesting that the asset is neither overbought nor oversold. Considering these factors, a potential long position could be initiated if the price breaks above the resistance level of $0.043. The entry price would be $0.043, with a stop-loss order placed at $0.0316 to protect against a significant price decline. The target price could be set at $0.053, based on the historical price action and the upper Bollinger Band. Based on the provided historical and forecast data, PENDLE appears to be in a slightly bullish trend. The price has generally been moving upwards, with support around $3.54 and resistance around $3.64. The forecast suggests continued upward movement, albeit with some consolidation. Therefore, a long position could be considered. A suitable entry price would be around $3.35, with a stop-loss order placed at $3.23 to limit potential losses. The target price could be set at $3.64, aiming to capture the resistance level. This strategy incorporates the forecast price movement and support/resistance levels. Based on the provided data, the sandbox appears to be in a sideways trend with a potential for a slight downward movement. The historical data shows a range-bound price action with support around 36 cents and resistance around $0.379. The forecast data also suggests a dip in price during the next week. Therefore, a conservative strategy could involve entering a short position around 37 cents, with a stop-loss order placed at $0.375 and a target price of 35 cents. This strategy utilizes the RSI indicator, aiming to enter a short position when the RSI is above $50 and trending downwards. Additionally, the Bollinger Band suggests that the price may move towards the lower band, further supporting the short position. Based on the provided data, Decentraland appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations within a range, with support around $0.314 and resistance at $0.476. The forecast data suggests a continued sideways trend with potential for further downward movement. The RSI oscillates around the neutral level of $50, indicating a lack of strong momentum in either direction. Considering these factors, a conservative strategy could involve waiting for a clear break below the support level at $0.314. If the price drops below this level, a short position could be entered with a stop-loss order placed slightly above the recent high at $0.329. The target price for this short position could be set at the next significant support level, which is around $0.299 based on the forecast data. This strategy aims to capitalize on the potential downward movement while minimizing risk. Based on the provided data, ENG coin shows a potential upward trend. The price has been steadily increasing over the past 2 weeks, and the forecast predicts continued growth. The RSI indicates that the asset is not overbought, suggesting room for further price appreciation. A long position could be initiated at the current price of $0.125, with a stop-loss placed at $0.116, the recent support level, to limit potential losses. The target price could be set at $0.135, based on the projected price movement and the upper Bollinger Band. Additionally, the Bollinger Band suggests a potential breakout, as the price is approaching the upper band. This could further strengthen the bullish outlook. Monitoring the RSI and Bollinger Bands closely will be crucial for managing the position and potentially adjusting the stop-loss and target prices accordingly. Remember, this is just a suggestion and should be carefully evaluated before making any investment decisions. Based on the provided data, Uniswap appears to be in a slight downtrend. The historical price action shows a gradual decline over the 2 weeks, with support consistently around $8.99. The forecast data suggests this downtrend may continue in the coming week. Considering the RSI, which has been hovering in the neutral range, we can look for a potential entry point when the price approaches the support level of $8.99. A stop-loss order should be placed below the recent low at $8.63 to limit potential losses. The initial target price could be set at the next significant resistance level, which is around $9.90. However, it's important to note that the Bollinger Bands indicate a narrowing range, suggesting potential volatility. If Uniswap breaks above the upper Bollinger Band, it could signal a reversal of the downtrend. In this scenario, we would consider closing our short position and potentially entering a long position with a stop-loss below the recent low and a target price at the next resistance level. Based on the provided data, Chainlink appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations within a range, with support around $17.90 and resistance around $18.40. The forecast data suggests a potential further decline in the coming week. Therefore, a conservative strategy would be to wait for a confirmation of the downtrend. A potential entry point could be around $18, with a stop-loss order placed at $17.90 to limit potential losses. The target price could be set at $17.60, which aligns with the forecast and the support level identified. This strategy leverages the potential for a short-term price decline while managing risk effectively. The analysis of Aave's historical and forecast data suggests an overall upward trend. The price consistently trades above the support level of $248, with the forecast prices indicating continued growth. Based on this trend, a long position is recommended. A suitable entry price could be around $253, which is near the recent price action and below the resistance level of $307. To manage risk, a stop-loss order should be placed at $248, which aligns with the established support level. The target price could be set at $264, representing a potential 4% gain, based on the recent price highs. This strategy combines the upward trend with a measured risk-reward ratio. Based on the provided data, EOS appears to be in an upward trend. The historical price data shows a consistent increase, and the forecast data suggests continued growth. The support price at $0.614 serves as a strong foundation, while the resistance price at $0.665 presents a potential ceiling. Considering these factors, a long position could be initiated. A suitable entry price would be around $0.630, with a stop-loss placed at $0.614 to mitigate potential downside risk. The target price could be set at $0.665, aiming to capture the anticipated price increase. The RSI indicator suggests that EOS is not currently overbought or oversold. However, a dip below $30 could signal an oversold condition, presenting a potential buying opportunity. Bollinger Bands indicate that price volatility is relatively high. If the price moves above the upper Bollinger Band, it could signal a strong bullish momentum and warrant a further increase in the target price. Conversely, if the price falls below the lower Bollinger Band, it could indicate a weakening trend and necessitate a reassessment of the position. Based on the provided data, Tron appears to be in a sideways trend with a slight upward bias. The historical data shows prices fluctuating within a range, with support around $0.232 and resistance at $0.253. The forecast data suggests a continuation of this trend, with prices potentially reaching 25 cents in the coming week. A suitable strategy could involve a long position entry around $0.238, with a stop-loss set at $0.232 to limit potential losses. The target price could be set at 25 cents, aiming to capture the projected upward movement. This strategy leverages the potential for a breakout above the recent resistance level, while also incorporating risk management measures. Based on the provided data, Suncoin appears to be in a sideways trend with a slight upward bias. The historical price data shows consolidation between the support level of $0.019 and the resistance level of $0.0207. The forecast data suggests a continuation of this trend, with prices fluctuating around the current levels. A potential strategy could involve a long position entry around $0.0188 with a stop-loss order placed at $0.0185 to limit potential losses. The target price could be set at $0.0205, aiming for a potential profit of 7.5%. This strategy incorporates the RSI indicator, as it is currently hovering around $40, suggesting that the asset is not overbought or oversold. Additionally, the price is trading below the upper Bollinger Band, indicating a potential for further upside movement.